Yo-ho, what's going on, guys? What's going on? All right, so Sunday fun day. How's everybody feeling out there? Emotions are a little bit lightening up a little bit. People are feeling a little positive. Well, we'll have a look and see what's going on in the market today. What's Bitcoin going to do? What's the market going to do? And are we in for a little bit of a rally? Going to be interesting, guys. Let's get into the chat just a little bit first. We have 0 super chats to start the stream. H. Barbarina in the house. What's going on, my guy? Good to see you, brother. Good to see you as always. Quentin, my guy. What's happening, man? William. Kind of a slow Sunday today. Holy smokes. Guys, make sure you're hitting the like and subscribe. What do we got? 160 people watching. We have 29 likes. Guys, oof. Let's get to 100, my friends. Let's get to 100. Isaac, my dude. What's happening, brother? Danny's in the house from the UK. Stella says, China is controlling and doesn't want millions to participate in the wealth transfer and front-run banks. That is obviously why they're doing it, because in a year they will suddenly legalize crypto. Yeah, they keep yo-yoing back and forth We're going to get into it, though. I think it's more strongly revolving around stable coins and them not wanting to use stable coins that are largely backed by the US dollar. Jamestown, what's happening, man? John, blessings, my friend. Good to see you. Holy smokes, we're caught up in the chat already. Watching this crap while Quant is up. Okay, good for you, man. Well, hey, whether they love you or they hate you, and they're talking good about you or talking bad about you, guess what? They're still talking about you, right? Bruno, what's up, buddy? 21 months, my dude. Strawberry Dragon, what's going down? Happy Sunday afternoon. Good to see you. Good to see you. Love it, guys. Let's get into the news since we are already caught up in the chat and we have 0 super chats to start the stream. All right, so let's dive on in. Let's get right into the China stuff right off the hop. See what's going on. Ben, what's up, buddy? Happy Sunday. I'm ready for a pump or dump so trades don't slump. Yes, guys, it is the perfect time to be trading right now. If you are a trader, you can join our trading group. I have dropped 12 new trades in the last 3 days. 4 a day is what we're averaging right now. Jump aboard, guys. We have been absolutely crushing it, and it's 50% off right now using the code in the description and the pinned comments. It's me, Mario. What's happening? Good afternoon, Senor Rob. Thank you for your help in this crypto chaos. Absolutely, man. If you need something to keep you occupied until the run, sign up and train for a marathon. Less time to complain when recovering. Yes, absolutely. You're absolutely right. Hey, Rob, my guy. What's up, brother? Good to see you back, man. Good to see you. Thank you for the welcome back. Richie Rich. Happy Sunday. Let's make some money. Passenger. Rob's the GOAT, the best. Thank you so much. Thank you so much. Let's get into this article, guys. China declares Bitcoin and crypto illegal. Warns on stablecoins. Let's check it out. China has tightened its stance on crypto again, which was funny because they did it in the last cycle like 4 times or something like that. Warning against Bitcoin, other digital coins, and stable coins. The central bank said these currencies aren't recognized as official money in China, and using them to make payments is illegal. The statement followed a high-level meeting with several major government agencies, including public security, internet regulators, top courts, and financial watchdogs. Officials said crypto speculation has recently picked up again and is leading to illegal activities that could threaten financial stability. China's central bank said cryptocurrencies aren't legally recognized in the country. Because of that, any business that uses or deals with crypto is considered illegal. It also noted that stablecoins don't meet China's rules for preventing money laundering or verifying users. Officials warn this could make them easier to use for things like laundering money, fraud, or moving funds across borders in illegal ways. The meeting stressed that China will continue to enforce its prohibitive policies on virtual currencies. Officials called for deeper coordination across departments to strengthen monitoring and regulation. Additionally, they promoted strengthening legal frameworks to deal with new threats. Market monitoring, capital flows, and information flow were found to be critical areas that needed immediate action. Authorities also pledged to combat illicit activity while protecting residents' property and preserving economic stability. The meeting also tied the crackdown to broader political guidance. Officials instructed agencies to align with Xi Jinping's thoughts on socialism with Chinese characteristics for a new era in fully implemented directive from the 20th National Congress. Consequently, financial risk prevention is described as the perpetual theme for all regulatory work. So China still trying to wrestle down crypto so that they can control it. Never going to happen. Never going to happen. All right, let's keep moving. Volks, what's happening, man? Old house, my guy, tomorrow's going to be takeoff day. COMEX doing some manipulation on silver on that shutdown. I agree. Restful Mind with the first super chat of the stream, 22 minutes in. Wowza. Thank you, Rob, and hit the like button, folks. Yes, absolutely. Smash it, crack it. We got 200 people watching right now, guys. We have 43 likes. That is embarrassing. We can smash it, guys. Let's go, baby. All right, next piece of news. Let's keep rolling along here. Bitcoin recovers. Market trends show continued downtrend potential, though. Bitcoin climbed back towards $92,000 in November of 2025 after a significant decline from its October highs, impacting major cryptocurrencies and market capitalization. The decline highlights investor caution and bearish trends, with ETF outflows and technical indicators suggesting prolonged volatility and macroeconomic influences. Yes and no. That's a little misleading when they talk about ETF outflows, because if you watched the Blockchain Buzz episode 6 last night, we discussed that the capital that's flowing out of the spot Bitcoin and Ethereum ETFs is actually flowing into the spot Solana and XRP ETFs. So while we're seeing outflows on spot Bitcoin and Ethereum ETFs, we're seeing actually inflows on Solana and XRP ETFs. With no real new liquidity coming into the markets, what we can safely assume is that is simply just capital repositioning from the spot Bitcoin and Ethereum over to Solana and XRP. So yes, there's outflows on Bitcoin and Ethereum. However, there's inflows on Solana and XRP. Something to keep in mind. The cryptocurrency market recently saw another notable shakeup. Bitcoin, which had recently dropped by 30% from its October high, climbed back towards $92,000. This upward turn is still shadowed by ongoing uncertainties in market sentiment. Market reactions include significant ETF outflows, again, which I just went over with you guys, underlining investor risk aversion. Notably, altcoins like Ethereum showed short-term declines, while some tokens showed resilience. Such dynamics indicate a complex reaction across different crypto sectors. The immediate market impact is evident in large capitalization losses exceeding $1 trillion. Investors remain cautious as indicators suggest further potential declines. Technical formations like a death cross add to market hesitancy. Financial implications are underscored by bearish signals and shifting investor behaviors. ETFs showcased a monthly outflow surpassing $2.33 billion, reflecting preferences for more stable assets. I got a cough. Sorry, guys, I had a cough that just wouldn't go away. All right, technical patterns including the death cross historically precede bearish trends. This indicates persistent market challenges despite short-term volatility recovery. The market trajectory could continue downward if risk-off sentiment endures. Long-term projections remain positive, with upcoming halvings and increased institutional interest potentially elevating Bitcoin's future value. Past data suggests such corrections do not alter the broader positive outlook for the major cryptocurrencies over extended periods of time. So, big picture, guys, things look good. Keep in mind, a strong negative with crypto digital financing is that older people cannot jump on that moving train. Some of them don't even have emails or use the internet. China population equals old people. You're absolutely right. And they do have a population crisis going on there right now as well. So you are correct. Dave, what's up, man? Good to see you. What it is, man, what it is. China may be slow to adopt crypto. For that reason, so many old people there. Yes, exactly. AKP dropping that super chat. Welcome home, Rob. Thank you so much, guys. Thank you guys for being here. I hope you guys missed me whilst I was away. Let's get into another piece here. If you don't know where I was, guys, if you're new here, I was actually in Japan interviewing Hara-san, the CFO of Jasmy and the CEO of Junction. That documentary will be coming out. I think we talked about it last night. I think it's going to be a 3 or 4 part documentary, actually. So I'm excited about it. Tether's strategic shift sparks debate in crypto community. BitMEX co-founder Arthur Hayes used platform X to discuss Tether's financial strategies on November 29th and 30th of 2025, questioning their Bitcoin and gold reserve moves against upcoming Fed rate cuts. The potential insolvency of USDT raises alarms for market stability, prompting calls for increased transparency amid Tether's strategic shifts towards cryptocurrencies and gold amid interest rate concerns. Arthur Hayes addressed Tether's strategic pivot towards accumulating Bitcoin and gold assets, raising questions about the consequences. This shift comes as Tether anticipates Federal Reserve interest rate cuts, moving away from cash-like instruments, while Tether remains solvent on paper, holding approximately $181 billion against $171 billion in liabilities. Market participants are assessing liquidity risks arising from the asset's adjustment. Theoretical solvency issues garner focus due to the possibility of gold and Bitcoin prices declining by around 30%, potentially dissipating Tether's equity cushion. So basically the value of what they're holding, because it's not pegged to anything, the volatility could lower the value of the Bitcoin and gold that they're holding, making them insolvent, right? Hayes' analysis spurs strong reactions across the crypto community. Critics argue that Tether's profitability can withstand such shifts. Citing its broader equity stance, former Citi researchers Joseph noted Tether's profitability beyond disclosed assets despite skepticism. Tether maintains its operational stance confidently, though community debates on financial transparency persists. Did you know that Tether has managed to sustain its USDT peg during previous crypto market downturns, leveraging high interest periods to generate profits and reinforce market confidence? So basically, Tether has played this game before, and they've faced major market volatility, major crashes, FTX, for example, and so on and so forth, and yet they have stood the test of time. Expert insights from CoinKoo team suggest that regulatory scrutiny on stablecoin reserves may increase as central banks influence interest rate decisions. Tether's asset choices, notably in volatile commodities like gold and Bitcoin, might elevate regulatory questions about the reserve safety. Yada, yada, yada. Rodney, what's up, buddy? Did you find your trip to be very informative? I found it to be extremely informative. There is some very bullish stuff coming out in this documentary, guys. For all you Jasmy fans out there, you're not bullish enough. I promise you. You're not bullish enough. Why is it very profitable to sell crypto wallets? Another scam. TP Ken official with the super chat. China is not slow, but they are trying to control, aka manipulate the markets to be sure, like the same way the US does to stop little fish to become wealthy. How about that? Yes, you're absolutely right. Not only the small fish, but they also want control of, they don't want their stable coins to be used that are backed by the US dollar. That would give you the US more control over capital in China. So what they really want is they want stablecoin usage in China that's backed by China for China, right? And it just makes financial sense to not want another country to have such massive control over stablecoins that your citizens are using, especially in a dictatorship, right? So I can't believe how manipulated is the price of ZBIC. When do you think ZBIC will be listed on Coinbase? I think that the listing on Coinbase is inevitable, to be honest with you. And as Simon had said in a recent AMA, we are approaching listing season. So, and they do have a lot of listings coming, he said. So, hey, Rob, we had a one-on-one yesterday, the 29th. However, you didn't send me a link. Yeah, that's because I just got back from Japan. I will shoot me a DM and we will reschedule. However, I had nothing on my calendar, which tells me that you may not have confirmed your appointment, your one-on-one. So, over the top, supporting me over on Rumble. Thank you so much as always, man. Are we still good for a one-on-one, or do you need to do another date? We booked for today. We should be good. We should be good. Specifically, Simon said it's November. November is listing season. Yeah. All right, continuing on. What else do we have? We actually have a couple of clips to get through here. Just short ones, though. We got this one here. Tom Lee, couple Tom Lee clips. They're only about a minute long.
For a really strong rally into year end. And I know we just
Still supports a rally.
Terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people have lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. You know, it's really a 5 or 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. You know, as we're doing work into next year, and I think earnings visibility is going to be really good.
Tom Lee is not giving up his stance on a rally into the end of the year. Here he is again.
We know we're in the midst of a downturn for crypto prices. Bitcoin and Ethereum are the ones everyone is watching because they're the two largest. And Bitcoin, of course, is the flagship. I think we are so close to the bottom here, especially for Ethereum. I mean, the bottom could be happening this week or within the next 4 days. And from there, we are going to have, I think, a V-shaped recovery because of the liquidity that's coming as the shutdown has ended, the U.S. government shutdown. And also because the central bank, I think, is tilting dovish, especially with a potentially new Fed chair. That, I think, should propel prices very strongly into the end of January. And that's where I think Ethereum, could be 7,000 to 9,000. And I believe Bitcoin is going to recover to past its all-time high. We know we're in the midst of a...
So Tom Lee calling for a new all-time high on Bitcoin and a $7,000 to $9,000 Ethereum. I love his stance. I love it. Here are the U.S. events traders say could influence crypto right now. Financial markets are heading into one of the most consequential weeks of the quarter, with a dense cluster of Federal Reserve signals and major economic releases set to steer sentiment across stocks, bonds, and crypto. Investors are preparing for volatility as multiple data sets converge with high policy relevance, and the end of quantitative tightening adds another layer of uncertainty. The week opens with the Federal Reserve, Jerome Powell, delivering a closely watched speech at a time when markets are sharply divided on the timing of the next rate cut. His tone will be analyzed for any shift in concern over the labor softness or inflation fatigue. At the same time, quantitative tightening is officially ending, a structural shift that marks the first break in the Fed's multi-year balance sheet reduction campaign. Traders will also digest fresh PMI numbers and the latest ISM manufacturing reports, both of which will help gauge whether business activity is weakening or stabilizing into year end. Wednesday brings an additional batch of PMI and ISM release, offering a more complete picture of the U.S. production strength and service sector momentum. With recession chatter resurfacing after weaker labor readings, these numbers will be watched for confirmation of either a slowdown or a rebound. Any deviation from expectation could push Treasury yields sharply in either direction, influencing everything from equities to Bitcoin. The tone shifts to labor dynamics on Thursday as initial jobs claims land. Markets have become extremely sensitive to even small changes in this report. Given how directly it affects the Fed's path, a higher than expected print would likely reinforce the market's belief that rate cuts are drawing closer. The U.S. trade deficit is also due, providing clues about global demand conditions and the health of the export sector. With international markets also slowing, traders will watch for signs of further trade contraction. The most important release arrives on Friday, the Personal Consumption Expenditure, or the PCE inflation report, the Fed's preferred inflation gauge. After several months of uneven progress, this debate will determine whether the central bank has the confidence to shift towards a more dovish posture in early 2026. A softer PCE reading could trigger a bond risk on rally across equities and crypto. A strong one risk, does that mean? I think they meant to say on risk, reigniting fears of sticky inflation and delaying rate cut expectations once again. So this is a big week we are going into this week, guys, with something important happening from the federal government every single day, Monday through Friday. Could be a very volatile week to the upside or to the downside. Could go up, could go down, right? There she is, the one and only Gamma Goddess. Just woke up from a long night, staying up, partying with our Patreon members on open mic. Hope everyone's doing well. Let's get this money. Hell yeah. Good to see you over there last night, Gamma. It was good to see you, my dear. Passenger says, does Hara talk to you about what he's doing to remove Jasmine? Yes, he actually does. He actually does. There's a very, very clear reason or plan in place, and everything is revealed. Chris, my guy, thank you so much, man. Thank you for the support. I appreciate you, man. This guy is selling Zebek at 2.5 cents. That is his exit. Don't believe it's more. Okay. This guy's name is Rob, first of all. And it's not a secret. It's not a secret plan, brother. You're not revealing anything new. Let's keep it going. Let's keep it going. We have a nice clip here about the Fed. So we've got Kevin Hassett and POTUS, the new Fed chair. The Fed could cut rates to 1%. We know they're pushing for it. Let's have a look.
The long-awaited September jobs report came in much stronger than expected. Payrolls rose by 119,000 a month, though the unemployment rate ticked up to 4.4%. Yahoo Finance Fed correspondent Jennifer Schonberger sat down with Kevin Hassett, the director of the National Economic Council. He reacted to that jobs report, affordability challenges, and the possibility of being named Fed chair.
I think that if we look at the payroll side, that's correct, that there was outsized growth in education and healthcare workers. Sometimes we see that around September because of seasonals with people coming back to school. But it is true that there's been a sectoral increase over time of demand for healthcare workers. And I think that that's a trend that will likely continue. The thing that jumped out at me that I thought was very interesting in the report was a big surge in construction employment. One of the things that was a high priority for us when we passed the big beautiful bill was expensing factory construction. And so the fact that we're beginning to see people breaking ground on all those new factories that we expect to come up over the next year or two is a really positive sign for the outlook going forward. I think if you look at GDP now, it's running at 4.2% now for the third quarter, and it was about 4% in the second quarter. So that you could say that coming into the government shutdown, this jobs report shows us that it was full steam ahead, this economy, about as good as the economy gets. On the unemployment, I think that there are sort of two times as an economist when you look at the unemployment rate where you have to decide what you think about it. There are two ways that you can think about it. One is if labor force participation goes down and unemployment rate goes up, that's a really bad sign. Because what it means is that people are getting frustrated and they're giving up trying to find a job. If labor force participation is going up and the unemployment rate goes up, it could be that it's actually a whole bunch of people who came off the sidelines and they're looking for a job, but it's actually good news because of the labor force participation, not, of course, because of the unemployment rate. And there's a big uptick in labor force participation in this report, which suggests that, the full steam ahead economy that we've created pretty much since we passed the big beautiful bill is getting people off the sidelines and making them look for work. And so if you figure that we got construction people building factories and people cut off the sidelines and looking for work, you'd have to say it's a really strong report.
To your point, Kevin, there were some concerns that the labor market had been weakening until we got this report, putting a rate cut on the table for December. Now that we've gotten this report, looks like that's becoming less likely. What's your reading, and what would the administration's reaction be to no cut in December?
Well, I think that if we look at the news that we got before this report, and don't forget this is a September report, the news that we got between the meeting 2 meetings ago and the last meeting with the Fed, and recall that 2 meetings ago, the Fed was saying, yeah, we're going to cut 3 times. It was pretty much priced into federal funds futures markets. Well, the news that we got subsequent to that meeting, in between the last 2 meetings, was that we had a government shutdown that's going to reduce GDP growth by 1.5%. And we had a consumer price index report that was way better than expected. In fact, it was lower than 48 forecasts that were people who were surveyed at Bloomberg. And so if you've got, before this report, a whole bunch of stuff that would argue in favor of another cut, then you'd have to ask yourself, is this cut, is this in jobs report, is it large enough so it would offset that other news? And I don't think that that would be prudent. I think that the headwind for the fourth quarter is really strong. The shutdown came at just about the worst possible time. I've had airline CEOs coming in and talking to me about how disruptive the Thanksgiving holiday travel season has been, because people will be booking their flights for Thanksgiving, and a whole bunch of people decided not to go on Thanksgiving. So I don't really think that we have a full handle on how destructive this shutdown will be for fourth quarter GDP. We're super optimistic about the future, but I think it would be a very bad time for the Fed to pause.
So it sounds like you think we could see some slowdown here in the fourth quarter before a bounce back next year. I do want to ask you,
because of the government shutdown, yeah.
Yeah, I do want to ask you, though, because the president hinted on Tuesday that he may be starting to talk to Fed candidates for the next Fed chair himself. I know you are on that short list. In fact, you are the favorite right now, according to Polymarket. Have you spoken to the president about this? And if you were selected, what changes would you make if you were Fed chair?
I'm not going to talk about discussions I have with the president. That's one of those things you don't do when you're a White House advisor, regardless of what the topic is. I can say that I'm humbled to be on the list. There's a lot of great folks there. And I think that probably each and every one of them, like me, puts a high priority on Federal Reserve independence, on sound money policies, and getting interest rates aligned with the data. I think to the extent that I'm old friends with Jay Powell, to the extent that we've had disagreements, it's not because he's a bad guy. It's because I think they've made some bad policy decisions. And they've made policy decisions that look to me to be at times partisan. So if you think about it, when President Trump's first elected, then even before he's inaugurated, the December before, they start hiking rates. When we had the Tax Cuts and Jobs Act, which was a supply side tax cut, which should give you growth but no inflation, they started raising rates. And then when Joe Biden came in and spent like a drunken sailor and gave us inflation, they told us it was transitory, didn't do anything about it. In fact, they didn't start hiking the rates to control inflation until after Jay Powell was reappointed by Biden. And then they gave us these surprise rate cuts right before the election, presumably to help Kamala Harris. I think that there's a lot of house cleaning needs to happen at the Federal Reserve, and I'm confident that anyone the president chooses will get to work and try to fix it and make the Fed independent again.
Switching gears a bit, the jobs report showed that wage growth grew by a strong clip of 3.8%, so a good deal above the inflation rate of 3%. Yet Americans still feel that prices are too high. In a new Fox News poll, it shows that some 76% of voters view the economy negatively, and fewer than 1 in 5 think that inflation is under control right now. I know last week you took some initiatives to announce that you are going to lower tariffs on beef, coffee, nuts, spices, and dozens of other agricultural food products. Could we see other tariffs brought down or other carve-outs as you look to improve affordability?
Well, I think that first talking about how people are feeling about prices, you have to go back and remember that we had more than 20% inflation over the Biden years, which really caused significant harm to people's lives. And really, one of the most striking numbers for me that really takes it home is that the typical average mortgage payment when President Trump left office last time was about $1,300 a month for the typical median home, and it jumped because of inflation and higher mortgage rates to $2,500 a month. And so for their homes alone, and you imagine a lot of people have adjustable rates, so they would have experienced a lot of that. For just like getting your house that you then like have to put the groceries in, the cost of it almost doubled under Joe Biden. And so, we're reducing inflation, we're cutting the cost of things because we've got a fiscally responsible plan again, and we've reduced the deficit quite a bit this year. Mortgage rates are coming down, but the hole that was dug is enormous. For groceries, I'll go to groceries as well. A typical family in President Trump's last year, spent about $400 a month on groceries. Under Joe Biden, it jumped to about $515 a month. And so they're doing that while their mortgage payment goes from 13 to 25. Of course, there's a lot of work still to be done. But the hope isn't just hope; it's just like practical. I guess historical evidence is that we're going to fix this. And the way to think about it is that the way you fix this is you get incomes to go up a lot more than prices. And under President Trump in the previous term, you might recall that we got incomes up right before the COVID shutdown. Incomes were up by about $6,500. And so we expect that we can outperform our first term. And if we do, then all of these pocketbook issues will be solved.
But do you think, or could we see other actions, other tariffs being brought down, other carve-outs to help with affordability? Is there anything in the pipeline, anything on the table right now?
Well, I think that there are people who come to U.S. Trade Representative Jamieson Greer every day with requests for changes in the policies. The bottom line is that the purpose of the tariff policy is for the U.S. to onshore production for the things that we can make here, and to make our economy more secure and get the jobs to be created here. And so for some things like bananas and coffee, that was never really the intent of the policy. We're not expecting that we're going to all of a sudden have lots of coffee growers in the U.S. I know we've got some great ones in Hawaii, but they don't have the kind of capacity they do in Brazil.
Before I let you go, the president said yesterday at the U.S. Saudi investment conference that he's looking at doing a dividend for the middle and lower class income brackets of, he said, at least $2,000. I know this would need legislation to pass, but is the administration looking at checks of more than $2,000? And while this would help cushion Americans' pockets and help with the affordability issue at the present time, do you worry that that could also be inflationary versus rolling back tariffs?
Well, if you look at what's happened since President Trump took office relative to last year, on a year-over-year basis, the deficit is down about $400 billion because of spending reductions, tariff revenue, and surprisingly high tax revenue because we've got a real growth dividend going on right now. And so if we're on track to have about a $600 billion reduction, that's going to be 6-7 trillion over 10 years because of a little bit of growth, then there's room to give more help to people who need it the most. And I'm sure that that's something that President Trump and congressional leaders will discuss as we think about maybe having another reconciliation package this year or next.
Stimmy, baby. Let's get that stimmy going. Stimmy for Jimmy. Scam. Ray, what's happening, my guy? Blessings. He says smash the like. Yeah, we got 321 people watching right now, guys. We have 76 likes. It's like just sacking me, guys. It's sacking me, right? Let's get to 100. Hit the like button. Rob, would you say we found the local bottom? Well, good question. You know what? Let's go have a look over at Bitcoin before we get into this next piece, okay? Now, I see two possible scenarios here moving forward, right? In the near term. Either we're going to come back down and double bottom before takeoff, which is, probable, or what we're doing here is we're actually setting up a bull pennant on the daily time frame, and we're just going to break to the upside out of this. Either way, our target is likely going to be the same, right? We'll smash through, because right here, this red line here is actually a CME gap at $96,000, right? So this would break us up through that CME gap. Maybe we retest the top of this golden pocket as support around that 96.8 area before continuing up further, right? So one of two things is going to happen. Either we're going to break out of a bull pennant here to the upside, or we are going to come back down and put in a double bottom, before moving up, right? Damn it. So yeah, pick your poison. Those are the two scenarios I see kind of playing out on Bitcoin. No way you went to Japan. Cool. Yes, I did. I actually had an interview with Hara. I filmed a full documentary on it. My editor right now has it and is kind of piecing everything together. I still have content I have to send over. I think it's gonna be a 3 to 4 part documentary series on Jasmine and Hara. So yeah. Diz, what's happening, man? Good to see you. Ty is in the house. Okay, so let's get into this piece that we were going to go look at here. Strategy will sell its Bitcoin on one condition only. In 2025, Bitcoin is no longer a marginal asset of cyberpunks. It has become a pillar of the balance sheets of listed companies, a treasury tool for institutional investors, and a financial lever for giants like Strategy. However, the recent announcement by its CEO reminds us of a harsh reality. Even the most fervent BTC advocates could be forced to sell as a last resort. Now, I've spoken about this many times. In fact, I remember me and Bleaves were talking about it on one of the episodes of Blockchain Buzz. Strategy, one of the largest institutional Bitcoin holders with over 640,000 Bitcoin, has reaffirmed its desire to retain its holdings. In a recent interview, Strategy's CEO, Fong Li, specified that the sale would only be considered if the MNAV ratio dropped below 1. And a capital access dried up, a mathematically justified measure to protect the Bitcoin yield per share, but not a systemic policy. Strategy relies on its ability to raise funds via shares issuance as long as its stock trades at a premium. Despite an MNAV close of 0.93 in November of 2025, Strategy continues to buy Bitcoin, even accelerating its acquisitions. The strategy underlines a reality. Selling Bitcoin would be an admission of failure, but also an alarming signal for the market. Yet, this reassuring stance hides a broader question. What if only Bitcoin giants had to do the same? Other Bitcoin giants, sorry. The thing is, I personally, if Strategy started selling some of its Bitcoin, I wouldn't see it as a failure. They are in massive profits. That's not a failure, right? If they were selling in the red, it might be a failure. But I think their average cost per Bitcoin is like $74,000 or something like that. Bitcoin is currently at $91,481, and they hold over 640,000 Bitcoin. They are in massive profit, right? So I wouldn't necessarily say that it's a failure. In 2025, data showed that 25% of Bitcoin supply is held by companies, funds, and ETFs. Meanwhile, whales addresses holding 1,000 Bitcoin or more control 40% of the circulating supply. Individuals remain the majority with 65.9% of the total supply. This increased centralization contrasts with Satoshi Nakamoto's original vision. He imagined Bitcoin as a peer-to-peer currency, censorship-resistant and decentralized. Start your crypto adventure safely with Bybit. Oh, is that an ad or something? Anyway, today the value of Bitcoin largely depends on the decision of a few centralized players like Strategy, BlackRock, and states through their reserves. Bitcoin critics criticize, I'm tongue-tied, this evolution. They believe Bitcoin has become a speculative asset for the wealthy. Far from its initial goal of financial freedom for all, Satoshi saw this centralization. What would he think of the evolution of his creation? And it's funny because that's why I always say to you guys that Bitcoin maxis, I love Bitcoin, don't get me wrong. I hold Bitcoin, I continue to buy Bitcoin, I will never sell my Bitcoin. However, I'm not a Bitcoin maxi. Bitcoin maxis will always be intellectually dishonest with you, right? For a couple of reasons. Now, they say that they're so excited about the adoption of Bitcoin by ETFs and BlackRock and Strategy, and it's on these companies' treasuries and all this kind of stuff. Okay, well then, I mean, that is kind of contradictory to why you say you love Bitcoin in the first place, because it's supposed to be against those individuals, and now you're happy those individuals are involved in it, right? So you're in it for the money, not what you're saying you're in it for. So they're all intellectually dishonest when it comes to their reasons for, buying and holding Bitcoin. It's about money at the end of the day, nothing else. And there's nothing wrong with that. Most of you guys, I would say 99.9% of people in crypto are here for the money. There's the odd person that's here for the tech, but they're here for the tech and the money, right? Imagine that Strategy, Tesla, Block, and ETFs decided to liquidate even 10% of their reserves simultaneously. The consequences would be immediate and devastating. Indeed, a massive supply on an already volatile market could drop Bitcoin's price 50 to 70% within a few days. Companies with debts denominated in Bitcoin would be forced to sell more to cover their margins, creating a downward spiral. Additionally, miners under pressure would also have to liquidate their reserves to pay operational costs, amplifying selling pressure. So the moral of the story here, guys, is that there's a lot of shilling of this concept that Bitcoin will never go into another bear market because it's being held by ETF holders and institutions and treasuries and all this kind of stuff. If they all start to take profits and sell, I believe we're actually going to see a worse bear market for Bitcoin than anticipated, not a better bear market for Bitcoin than anticipated, right? Because it's not decentralized anymore. The big money holds the big money holds about, 41% of the supply or something along those lines, right? That's a lot to be dumped on the market. That would devastate the price of Bitcoin, which for me, I wish they would do that, because wow, my truck would be in reverse, baby. In reverse, we would be backing that truck up. You know what I'm saying? You know. So yeah, so going back over to, let's have a look at TradingView. Ben says, you think the head and shoulders on ZBEC 4-hour will play out? It seems to be fighting resistance, or maybe just volume, lack of volume. Could just be a lack of volume today, to be honest with you. But if I go and I look over at ZBEC, you said the 4-hour? I usually don't like relying on lower time frames, to be honest with you. I don't see a head and shoulders pattern on the 4-hour time frame for ZBEC. I don't see a head and shoulders pattern. Not at all. I don't know what you're looking at, brother. I do not see a head and shoulders pattern. I'm trying to zoom out. No. I don't see it, my dude. I don't see it. So, yeah. Jimmy Dunn got his stimmy. Jimmy got his stimmy, baby. What's up, man? What's up, Rob? Good to see you, brother. Good to see you. All right, guys. Well, listen, I got to get over to the Patreon. I got some coaching calls to do. Get over there. Book your coaching calls today, guys. If you want to just sit down and have a talk with me about your portfolio, if you need to restructure it, if you're fearful about the market, you need all that guidance and help, guys, jump over there. Book a one-on-one coaching call with me today. Let's have a chat. It doesn't even have to be about crypto, honestly. I mean, hell, we can talk about the Blue Jays if you want, right? Come on over. Let's have a chat. Or you can join our group coaching calls. I've dropped 12 trades over the last 3 days in our trading group over there as well. Get in on our trades. Our trading courses are free over there as well. Check it all out, guys. Our free newsletter, everything, all the tools at your disposal. The link is down below. It's in the pinned comments. It's in the description. It's 50% off right now, Christmas special. Check it out, guys, using the code in the chat, in the pinned comments, and in the description. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.